BlackRock is investing in DeFi. And of course, we all saw what happened to Ondo when BlackRock said it was investing into that and into RWA platforms in general. Whereas most altcoins have been suffering, Ondo's actually up 25% in the last 3 months. And BlackRock is seemingly doing it again, but this time for DeFi. So which DeFi platforms are going to follow Ondo and buck the trend of what has otherwise been some pretty persistent and negative market sentiment? DeFi platforms are going to get a boost from this news, and we're going to highlight 3 altcoin projects in particular that will most benefit from this BlackRock news. Welcome to the channel. My name is Maddie, and this is Altcoin Buzz. All the best of luck if you choose to invest, and I do wish you genuinely very, very well. But I'm not a financial or investment advisor, so just remember that this video is not official financial or investment advice. Thanks to exposure from BlackRock, a lot of people are seeing DeFi making a comeback very soon. And DeFi, really like all financial platforms, needs a lot of money, capital, and scale to be successful. And that's because margins are small in this type of finance. So for an institution to make more than 1 or 2% on a multi-million-dollar transaction, that's actually pretty rare. With that in mind, let's jump into one area in particular that we expect to grow. That is staking and restaking. Lido is by far the biggest player here. They continue to be around 30% of the total market for staked Ethereum, and they are the leader in liquid staking options. But they're not the only player here. One further down the list here that we also like is Frax. They're currently number 23 at 0.48% of the market. And look, that sounds really small, but that number means that they're staking almost $490 million worth of ETH on their platform. They started liquid staking much later than Lido, Binance, and Coinbase. Those, of course, are the 3 leaders in this space. And Frax has its liquid staking coin, FRXETH. Frax also has a crypto collateralized stablecoin. We like this a lot, and we think we need stablecoin options outside of Circle and Tether. And so to be clear, the coin we're recommending from growth in DeFi is FXS, or Frax shares. The last 3 months have been particularly unkind to FXS, as is true for most altcoins out there. In the last 90 days, for example, FXS has lost half its value, dropping from $5.10 to now $2.50. The circulating supply is 80.5 million out of just under 99 million total, and its market value here is just above $200 million. Almost $13 million is part of the collateralization of Frax stablecoin, so that allocated FXS is not going anywhere. Also, as counterintuitive as it may sound, we think even though the ETH ETF will not allow the funds to stake or restake, liquid staking markets are going to continue to grow. Maybe the ETF gives due awareness to new groups to try crypto as an investment as well. That would lead to new liquid staking growth in addition to anything else that we'd see. But going even further than that, our partner Content Leads 2 thinks that BlackRock is going to set up its own validator. That and fork a version of ETH that they can more easily manipulate. It's entirely possible and actually quite likely. And this is easier to do on POS networks because after all, if Lido or Frax can have a liquid staking version of ETH, why can't BlackRock, which is much, much bigger, obviously, much more powerful and more market connected? The most important point here is that both the ETH and liquid staking should lead to more growth for ETH. And possibly both of those things are going to help each other grow as well. If you think they're going to grow as we do, then you at least should consider Frax's FXS for your portfolio. Okay, for number 2 here, our second entry on the list, we move on to a traditional DeFi platform, that being Compound. Compound created the first AMMs in crypto. They are an OG, and they've also collateralized over $2.2 billion across 8 EVM markets to make stablecoin borrowing easy and inexpensive. The idea here is that if BlackRock is going to invest solidly into DeFi, then DeFi infrastructure of the sort that Compound already provides is going to be an area that gets some of that funding, just like liquid staking and restaking will, as we discussed with Frax a moment ago. Savvy investors will also notice that there are some opportunities here. You can borrow inexpensively and maybe deploy the stablecoins you borrow to earn more than your interest payments. That said, it's not totally efficient given the LTV, that's loan to value limitations, most of which are in the 75 to 80% range. But still, if you need stablecoins for your favorite LP, you can get them at Compound while keeping your coin on deposit. We covered Compound quite a bit a couple of years ago during the DeFi summer, and they're really just chugging along quietly, making their platform even better. In the last year, C-O-M-P, is down, unfortunately, about 30%. Its market value sits right now at just below $350 million, and it's down about 50% from its recent high in March, about $95, and we're sitting here at just over $50. It's been beaten down mostly due to the negative altcoin sentiment in the markets, but through no fault of its own, really. And really, that just means a great project in the form of Compound is on sale right now.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.
Okay, and for our last entry here, we're going back to liquid staking again. And this time it's Rocket Pool. They are number 9 in the staking rankings with 2.3 billion ETH staked. That makes up 2.62% of the market and represents almost $100 billion in staked Ethereum. But 41% is held by either Lido or Coinbase. Now, that's a little too concentrated for many to be comfortable with. So with the same reasoning we used for Frax earlier, we also like Rocket Pool for when people will want to liquid stake, but choose an established option outside of the top 3 or 5 validators. Rocket also makes it very easy for you to run your own node if you want to stake for yourself and you have the 32 ETH required. That node infrastructure is a nice added benefit, and it could well lead to better decentralization of ETH staking if more people use it. You can also migrate your existing validator to Rocket and split your 32 ETH into 8 ETH validators. Again, another nice infrastructure type benefit. The last 12 months have been unkind to Rocket Pool. Despite liquid staking growing actually pretty aggressively, Rocket Pool's native RPL token is down about 54% in the last 12 months and down about 33% in only the last 30 days. People are ignoring ETH staking and infrastructure in favor of the Eigenlayer style staking narrative. But we see this as a mistake. Both should grow together, and of the two, a direct staker like Rocket Pool is a lower risk than Eigenlayer. Eigenlayer is subject to rehypothecation concerns, while Rocket Pool, Frax, and other direct Ethereum stakers are not, as they have all the coins in their possession staked with their validator of choice.